Welcome to Subramani. Yesterday I did a session in Clubhouse. I do not know how many of you watched that. I don't even know whether a recording of that is available, but it was a pretty longish session. I think I should restrict my sessions to about half an hour. Anyway, the question is today I'm going to talk about is one thing I notice is the amount of overconfidence that people have while investing. When you are buying a share, you have to constantly look for what is the downside in this and what is the upside. What is the upside and when will it be achieved? Now suppose you buy say shares of Yes Bank at 12 rupees or 13 rupees, whatever is the price today. I'm not even getting into about the quality of the stock, but if it doesn't do anything for 1 year, what you have lost is the opportunity cost of 1 year. You could have done something else with that money. Now you have to be extremely confident that at 12-13 rupees the company has something of value to offer, because if there is nothing of value to offer, after some time it will be at 8 rupees or could be at 16 rupees if it has something valuable to offer. How do you know when to sell? I have said this many times. It depends on whether you hold a trading position or whether you hold an investment position. For me, my investment position in the Yes Bank at 12 rupees would mean at 8 rupees I would just get rid of it, because the market is telling me something which I don't know. So how much is the risk that I'm willing to take? I'm willing to take about 33%, right? So 25%. 25% of 12 is 1/4, that is 3. So 9 rupees is my cutoff. So 8, 9, whatever, some price at which I will cut off. Or after 1 year, if it has come down and it has done nothing, maybe I will cut off, because if I think there is potential, the potential has to be realized in 3 years. Only if the share price doubles in 3 years, let's say it becomes 24, then I'm talking of some sensible return that I'm getting. If I don't get say double in 4 years, let's say, then I have come down to about 18% return, which is still okay. But in 5 years, if it is not doubled, which means I'm getting more something like 14% return. Till then it is okay, but beyond that, what happens? How long should you wait for the share to do something? Is it giving any indication at all? Has it moved from 12 to 16 or 12 to 17 over 2-3 years? Some change has to happen, because people have to start believing in it. Now, if you also see most of my videos, I keep talking about my successful holds. That is simply because I take my losses very quickly. If I hold Yes Bank at 12 rupees, at 9 rupees you will find me fidgety, and at 8.5 you will find me exiting completely. Correct? So I will never lose 12 rupees on a 12 rupee share. Yes, I could lose 3 rupees on a 12 rupee share, 4 rupees on a 12 rupee share, and that's it. That's the worst that can happen to me, because beyond that I will not hold. Similarly, in a trading position, I may hold just 10%. So if I have bought it at 12 rupees for doing a trade and not an investment, then my cutoff would be say 11 rupees or 10 rupees 75 paise or something like that, and it would just be automatically triggered. I don't care much about reviewing at that stage, because then chances are you will say, oh no, it is something temporary, Nirmala Sitharaman announced this and therefore RBI did this. It doesn't matter, don't get into that. You can always sell off and buy it back again, because the brokerage rates are today not very high. So don't get into these biases. Be very clear with your rules, whether it's a trade or whether it's an investment, right? If you take your losses very quickly, you will do well. And secondly, be paranoid about where you can lose money, what can go wrong continuing the same discussion. What can go wrong with Yes Bank? What indications? Do they still attract good talent, or do they do not attract talent at all? Do people still think of this as a Rana Kapoor bank? It is no longer it is more like a Deepak Parekh plus State Bank of India bank, but then the market perception is important. If the market perception is it is a Rana Kapoor bank and therefore it is quoting at a low price, it's a great thing to buy, because one day the perception will change. It will people will see it as a Deepak Parekh plus SBI parentage bank, and therefore the PE will improve. So see what is the reason why it is quoting at this price. And because if you're not ready for the downside, if you do not know what can go wrong, something is wrong with you, right? See contrarian opinions, or not just the noise on social media, but from people in the know. If you can get an analyst who does analysis of say an HDFC bank or an ICICI bank, very good chance that he will know, he or she will know about Yes Bank. So go talk, find out, find the people who think differently. For example, if you are not interested in gold, or you think gold is not a good bet, you're the Warren Buffett school of thought that it does not make sense to invest in gold, find a gold analyst who thinks gold is a good buy. Hear people who think exactly opposite of what you think. So if I think Yes Bank is not a share worth holding, and I'll wait for more signals, then the question is, what does an analyst think? What is the analyst who says it's a good buy? So go find out whether some mutual funds are holding it, what is their average cost of holding. Talk to an analyst either in the fund or the broking house through whom they bought it, right? It's not very difficult for to find out who has asked them to buy Yes Bank. So find out from them, get some research report, see what is happening, what is the reason why Yes Bank is a good buy at 12. You should also see why Yes Bank is a good sell at 12. Get both the views, read it completely, then make up your mind. It is very difficult because there is nothing in the balance sheet for you to decide whether it is a good buy or a bad buy. It's going to take a long time for the company to do well, if at all. So I'm not recommending Yes Bank, or I'm not saying it is worth selling, but I'm just saying look at all the sides, and maybe I'm repeating this, look at the downside, look at the downside, look at the downside, see what can go wrong, especially in the more expensive scripts, right? So if you are buying an expensive HDFC Bank or Asian Paints or HDFC Limited or Cholamandalam, Coromandel, whatever, look at what can go wrong, because things can go wrong in many industries, right? In fertilizer, something can go wrong, but suddenly fertilizer, if there's a ban for imports from China, or China decides it will not export to India or something like that, it could be great news for a fertilizer manufacturer. Then find out the catchment area, see where it is working, what is happening. Look at all that and see what can go wrong. And there are a lot of things which can go wrong in a agricultural company or in a company supplying to agriculture. There can be a drought, people can use less fertilizer, and that may be a great opportunity to buy, because you never know, the monsoon could be better next year and the price could go up. So if there is a big fall, find out why there is a fall. And also when there is a fall in the price, it means something is wrong which you have missed out. You can always go to the website, find enough research papers, find enough material on Q&A done with analysts, right? All those things are available. It is for you to go pick up, read, understand, find out what is the downside, and then buy. And when the downside happens, or the price is triggered when you think it's the downside, it's a time to sell, right? So you should know that, and you should be pretty unemotional about it. And that can happen only if you put the sell price the day you buy it. You buy it at 100 bucks, you say, okay, at 75 rupees I will sell, right? So then ruthlessly at 75 rupees you sell. You can't then say, oh, maybe something else has changed. Don't get into all that. Be clear how much of downside you can take, how much you want to take. Get out, rethink on buying that share, but go through this whole process. It can't be just because I thought it was a good buy at 12, so therefore it has to be a better buy at 11. No, that does not work, right? Thank you.